I might introduce you guys, and you guys can introduce yourself as well to get a double whammy. So I'm sitting around this table with the gurus of making wealth. Okay, that's why I think it's exciting. I've got Maddie on my left, who is a property buyer's agent, property advisor. I'll let you do a proper intro because I probably am not going to position you the right way, but he's the guru of investing in property. And I've also got Katie, who's the wealth of knowledge that brings to the table how to come up with the money. So one of the best finance brokers here on the Central Coast. And then myself, I'm a accountant, financial planner and business coach. So I kind of work with Katie and work with Matt to be able to enable clients to create wealth in property. So that's why we're here today, is to help the listener or the viewer on how to become wealthy with property and how to be able to get yourself in that position to be able to become wealthy with property. So I think today we really talk about the process, how to do it, how to make it easy, and obviously the benefits of doing it, because I know you've both bought property. I know I've bought property. I know we all understand the process of buying property and making money on property, but some of the listeners and viewers out there probably don't really know how. It's probably this kind of really big, hard, elephant in the room that needs to be addressed. So, guys, I might get you to do your own intro because I know I've probably done a pretty mediocre job at doing that. So, Maddie, take it away, and then Katie, you go for it.
Awesome. Well, first of all, thanks so much for having me. It's a pleasure to be here, especially to spend some time with some like-minded people and some really bright people as well. My name is Matt Sharpe. I'm the founder and director of Sharpe Property Buyers. So we're an independent buyers agent service where we help people purchase property. We're located here on the Central Coast, so we help people buy here on the Central Coast, but we also have a national investment model as well, where we help people purchase what we believe to be investment grade properties all over Australia. So we conduct all of our own research. We do all of our own, on the ground inspecting, et cetera, to help identify the best areas across Australia where we think, they're going to be set to grow. And, we also just guide our clients through the whole process of buying. As you mentioned at the top, it can be a little bit daunting and it can be a bit tricky if you don't do it all the time. So, not only do we help identify the areas, but we work with them throughout the whole process to purchase a property as well.
Over to you.
So thanks for having me. I'm Katie Dowton. So I am owner partner at Mortgage Choice in Erina. Luke, my business partner, and I have just recently taken over. So essentially we are mortgage brokers on the coast. We work quite closely with accountants, financial planners, buyers agents to help our clients build wealth through property. I've been doing this for almost 6 years now, having purchased a few properties of my own. So I think that's a big benefit of working with us, is that we know the ins and outs of how everything works. We've got 30 plus lenders on the panel, so we can find a great solution for all different circumstances.
Fantastic. Thank you. So when we're creating an agenda, we obviously we wanted to keep it pretty open because we want to make sure we touch on all key points. So someone listening or viewing goes, cool, I got everything that I need. I kind of understand why I buy a property. I understand how to buy a property. I understand how to use Katie as a broker. I understand how to use Matt to find the ideal property where I can make the most money, and also how to use our business and how to use me to be able to structure all your holistic financial affairs, because that's, I suppose, how we all integrate. So I don't know where to start this, but I'm keen to start somewhere. So I might put this over to you guys. Where do we start?
Well, I guess, and I'm sure Katie's the same, I'm sure you're the same, but just from our experience, the most successful, let's call it investors, that we have the pleasure of working with, basically have a team around them, right? They have a mortgage broker to assist with lending and structuring. They obviously have financial advisor, accountant, for example, to help with holistically how they're going to sort of build out their wealth and what their investment plans are. And then, they obviously have a property advisor or a buyer's agent to help them navigate through the property market as well. So I think it's important just to understand, if you want to get the best outcome with anything, you need to engage professionals in their field in order to get that outcome. So, very much, I know I've worked with you, Ryan, with clients, but I just stick in my lane. I identify the best property that I feel is going to meet the needs that are aligned with their, their holistic wealth plan, I guess. And what that is obviously budget, time for holding the property, condition of property, et cetera, and obviously Katie, with yourself, you're the specialist in writing loans and which client that is best suited to obviously which lender, which we're not licensed to advise on that stuff, so we very much are guided by yourself for that, and obviously the clients are as well. So yeah.
I do think that's very important. It's something that I think every client needs, and you're right, we've worked on some of my very close friends and family with yourself, Matt, and I think you've always got to stay in your lane. I think that's really, really important. So I know with any client that I've got on that I act as their accountant or financial planner, I make sure, look, what I know how to do is I know how to do tax, I know how to structure affairs, I know how to invest money into super, but even though I invest in property myself, I don't know how to select properties. And that's why I encourage every single client that I come across to make sure they talk to you. So they're getting specialist advice on how to buy the best property, because the reality is, if they do their own taxes, they're not gonna pick up the deductions. If they select their own property, they're not gonna find the best property. If they try and run their own finance, they're gonna end up paying double digits. So I think that is a really key point. I did some group coaching yesterday with clients, and I said, we were talking about lawyers in building businesses, and I said the same thing. I said, you need to then get a lawyer that specialises in your building business. So I do agree on that point. I think if you're going to create wealth, you do need a team of people, and if you're missing one of those key people in your team, you may be just missing the point. Okay, so I think have a buyer's agent, have an accountant, have a broker, and ideally have them all working together. I think is quite important as well. Otherwise, you've got different viewpoints, different beliefs. You've got a lot of clashing and conflict.
100%, and the message can be missed, especially if I'm talking to the client and then the client's relaying the message to you, and then you're relaying it to Katie, for example. So important that everyone's all in on the conversation, and you're probably liken it to building a house. I know we spoke about it off air, but everyone has their skill set, and they all contribute to getting the outcome of building that house from obviously the ground up.
Yep, and I think that's where the Chinese whispers comes in, is because I know that we have aligned values. So when I'm saying one particular thing to a client, I know we share that alignment, we share that viewpoint, we share that growth strategy. And I know the same is for you as well, Katie. So, I do think a big one is making sure that you have the team in the key spots, but they're also talking as well.
Absolutely. And I also think the other thing too is it is such a high stress transaction, and people don't realise that, especially with first home buyers. They don't do this every day. They've maybe never done it before. It's not, I don't think, as exciting as people make it out to be. So if you have a good broker and you have a good buyer's agent to guide you through the whole process, we take the stress out. There are a lot of things that we don't pass on to you because you don't need to worry about it. We've got it under control. We handle everything, and we do this every day. So I think that's a big thing as well, is that's the benefit of having people who know what they're doing, handle things for you. Because like you said, if you're building a house and you need some plumbing done, you're going to call a plumber. You're not going to try and do it yourself because, you want to get it done the best way that it can be done. So it's the exact same thing.
Yeah, I agree. And I think the second point I want to make on that is these consumers, these clients out there, they need push. They need confidence. They need coaching themselves. And so the thing that I've noticed with both of you, working with both of you, is that when I've got a client and I say, look, here's your wealth strategy, here's your financial plan, but you really need to go and speak to Matt to select this property interstate, because I've got no experience interstate, right, except for holding properties, but selecting, I don't have any experience. when I give them to you, Matt, you then go and you coach them and you communicate with them and you give them enough confidence, just like I have, to then go and do the transaction. And the same happens with the brokering of the deals as well. If they don't have that confidence and that coaching from your end, the whole deal's going to fall apart. So I think it's these clients are looking for us to get them across the line because they don't have the confidence, because they don't have, I suppose, the context, the education, etc., etc. So I think that's important as well, is each different specialist being able to really promote and give confidence to the consumer. Otherwise, it can fall over. Like I can have a great relationship and promote financial planning and the wealth strategy, but then if the buyer's agent doesn't push and coach through that process, they end up having this great financial plan with no property and potentially no lending. So yeah, I think it's...
And then you basically have an opportunity cost then.
Yeah.
Right? If you don't act quick enough, and we've seen how fast the property market's moved across, most capitals across Australia in the last sort of 2 years, a lot of people have missed out because they maybe didn't have the confidence and they hesitated. And also just even with... selecting a financial planner or an accountant or a mortgage broker, because the transaction of buying a property is so high, the difference can be tens of thousands, even hundreds of thousands, whether you're going to obviously get a profit or whether or not you're going to run that property at a loss, depending on the type of loan structure you have, obviously advice you have around, your accounting and whatnot, and then probably most critically, what type of asset you're actually buying. Are you buying a 2-bedroom apartment off the plan, which we all know at this table's probably not a wise investment decision, or are you buying, a freestanding home, for example, in a high growth market?
If you guys are cool, I want to stay there for a second on the time criticalness of transacting, because I think it is paramount right now to talk about that. I've got a lot of clients, business clients in particular, that they missed the property jump on the Central Coast that happened approximately 18 months ago. I know, Matt, you've got clients that it just takes like a day or two of non-responsiveness to miss a deal on an amazing property, whether it's on the coast or interstate. I know if they miss the 30 June deadline for me, right, they're going to potentially pay an extra $50,000 in tax. I know with credit rulings changing every 5 seconds, that can change the game because the property market has declined a little bit these last couple of months. Obviously, servicing's harder. Yeah. So I think we do need to talk a little bit about how time criticalness is so important, and I want to stress this point even more and magnify it by saying that some pre-retirees or even pensioners usually give me the common line, which is, I wish I had got advice in my 20s. And I'm like, yeah, so we've probably got a 1 year problem that's been times by 30 years with how much wealth they didn't make but could have made had they have got specialist advice. So I just want to get your 5 cents worth on wisdom, why people need to get real-time advice with their life and with these specialist areas, or they end up looking back in hindsight going, things could have been very, very different.
Well, I think it just comes back to compound interest. It's been referred to as the eighth wonder of the world. And as you said, if you're speaking to a retiree, for example, and they say, geez, I wish I've had some advice in my 20s. In terms of compound interest over like 30 years, that's quite substantial, right? Not just dollar value, but even just education and understanding and obviously building your knowledge over that period. But in terms of time, I guess, and acting quickly with the market, I think it's important if you have cash buffers in place, you've got good people around you, you've got obviously good money habits, and you're ready to buy, and opportunities are presented to them. You just need to take that. You just need to take that leap. We're buying properties, I'm not going to say every day, but we're certainly assessing a lot of properties every single day. And the markets that we've been buying are moving so quickly that literally a week or two can be the difference between $10,000, $20,000, and in some cases here, in extreme cases, $100,000 and $200,000. So when you're there and you're at the gates and you're ready to go, and obviously you've got your money in place, you've got your cash buffers, you're ready to buy, you just need to go for it, because the opportunity could be missed. And as we know, stock levels, so properties that are available to buy in good locations across Australia are still at almost record low levels. So it's not like there's a big influx of properties that are becoming available anytime soon. So it's also something to remember too.
And I think another thing is maybe the reason some people out there they don't move with their time fast enough is because on the other side of the coin, if you like, there's so much hype with other markets like cryptocurrency markets, etc. And everyone goes, you got to go buy crypto, you got to go buy Bitcoin, everyone do it, you're going to miss the boat. And then within 6 months, it's declining at a astronomical rate. I want to stress a point here that, yes, that is bad hype, okay, usually stimulated by the media. But I think the property market is a good, consistent game plan that enables a buyer to pick up great properties at the lower points, like you mentioned before, and still make money even if they buy at the higher points, because the trajectory is always pretty stable and always pretty on the up. So, yeah, I just think I want to talk about property a little bit in the sense that it is always a good safe play. What's your opinions on it, like property versus other markets?
I think property is definitely more the long game, generally speaking. And I think when you talk about crypto and things like that, lots of people, it's just sort of quick money and day trading, that type of thing. Whereas with property, you can make good money in most markets, interstate and things like that, if you buy and hold. So I think that's the other thing too, is that, like Matt was saying before, when you're ready to buy, from my experience and in my opinion, don't wait, don't rush. So that's where a buyer's agent can come in and they can look at all the different markets, maybe the Central Coast, or maybe there are some sort of areas where prices have peaked, I guess, in a sense. But that's where your knowledge and your experience comes in, because you can look at other markets and you can say, maybe this is not the best time to buy here now, but you can look at this area and we can come back to this. But I think the other thing too is that people are always waiting for the drop. We hear it literally every single day that they're like, oh yeah, I want to get pre-approval, but we're not going to purchase for 6 to 12 months because the market's going to drop. Yeah. I'm like, what do you know? Like, who says
Interesting. We've been talking about using specialists.
Yeah. So if you read the headlines and listened to sort of the media pre-COVID, or even when COVID was just starting and they said it's going to be a 30% drop and, property is just going to go hit the ground and it's a terrible investment and don't do it, it's a terrible idea, the complete opposite happened, and so many people were waiting and they missed out. So I think that's the other thing too, is don't get caught up in what's happening in the media. Be realistic and talk to the experts, because you're tracking that. You're way more aware of what's actually going on. So I think, that's the biggest thing.
I think you mentioned around, I think you're sort of nudging on asset classes, Ryan, like in terms of, comparing property with Bitcoin and maybe some other, shares and stocks and whatnot. The interesting thing about property is it's not an investment and a wealth growing vehicle to everyone. Right, there's only, I think, around 1/3 of Australians that own more than one property at any one time, right? So that means that basically 2/3 of people or Australians buy property to basically seek shelter. So it's an emotional purchase. Okay, so I think, and that's one of the reasons why property, I guess, continues to go up, especially if you're buying in areas where people want to be in, where there's human incentive and human emotions to be tied to that area, is because not everyone's looking at it as though it's an investment, right? It's not easy. It's not easy to sell. It's a long holding investment for anyone that buys property, as Katie mentioned, and that's probably because of the transactional costs in and out. But it takes some time, right? You can't just wake up tomorrow and say, you know what, I'm just going to clear out all my sell all my properties. So it can take probably 2 to 3 months, whereas some of the other asset classes you can. So I think the fact that it takes a long time to make a decision in selling means that more people are going to hold their properties for longer. And I think the other fact is, ultimately, people want homes to create shelter for their family and for themselves. And in most cases, they're going to do everything they can to hold on to that shelter, right? They're not just going to sell if they lose their job. They're going to obviously sell their cars first, or maybe they're going to try and, maybe they limit their expenses, et cetera, to hold on to that property. So that's what's interesting about property for me. And The flip side of that is when you're buying investment properties, I guess our philosophy is you're buying areas where people want to live in, right? So where that human incentive is, where those lifestyle drivers are, where those strong jobs are, because ultimately what drives property prices up is human emotion, right? The mum needs to be on that street because it's in the school catchment, or the mum needs to have the views of the beach. So if obviously with supply and demand, if there's a couple of buyers out there, a couple of people out there that want to buy that property for that scarcity reason, that's naturally going to drive the prices up. So that's probably jumping into asset classes is probably another podcast, but that for us is why we like it so much, and why we have, I guess, why we feel really confident about the property market going forward.
And I think something that even as an accountant and financial planner for well over a decade, something that even I didn't have smack me straight in the face until probably I was in my 30s, is the concept of return on capital. Because I think we look at different investment classes like crypto or shares or property, and we go, oh, they're all kind of returning the same. So if I don't need to go through all this pain of buying property and then selling property, I can just go and throw a bunch of money into the crypto market, or I can go throw it into a share portfolio and I can get the same kind of return. It is true, you can get the same kind of return, but you also miss a very, very big appealing point, and it's that even if you get the same return on each asset class, if there is a far greater amount of capital caught up in one asset class, e.g. property, and probably primarily property, you're going to get a far, far greater return overall. And that's a point that I'm very passionate about, because if I had a $1 million property returning 10%, and I had a share portfolio of 100,000 returning 10%, yes, they're the same rate of return, but I'm making 10 times the amount on the $1 million property. So I think it's really important to understand that a lot of us have been brought up from our parents, and they've usually had the viewpoint like, buy a property, pay down your mortgage, end up being debt free by the age of 50. This is the dream, right? And it's like, I had this same conversation with my very conservative parents, okay, and they've only ever owned one property. And it was like, that belief is coming from old stories that were premised on very high interest rates back then. Now, yes, we might continue to climb the interest rate cycle right now, but they were dealing with 17% plus interest rates back then. If we're still in a position where interest rates are 2, 3, 4, 5%, but we've got property markets returning double digits as an ideal and quite a norm, I'd rather be buying property. I'd rather be, buying property to live in. I'd also be wanting to buy property to invest in, because I knew I was making the greatest return on capital.
Yeah, you're right, and it smacked me right between the eyes as well.
It gets you in your 30s.
When I got when leverage was explained to me properly, I was like, oh yeah, okay. So your cash on cash return. So yeah, you nailed it with what you said earlier. But I think, just to obviously touch on your return as well, what some people forget about is your rental income is also a return, right? And in most cases, depending on the property that you buy and your loan structuring, a lot of the times the rental can cover most of your outgoings. So not only is your property going up in value, but you're also receiving somewhere, you're also receiving, I guess, a substantial income from rent, which is hopefully going to offset any of your deductions or holding costs.
And I think your strategy also changes over time as well, so it's very dependent on where you're at in your life, but you're completely right. Most people can, the rent can cover the cost of holding the property, so you're not putting in anything. If you might be getting $20 a week or something like that, but it's literally sitting there going up in value and you're not paying $1. So I think that's a massive thing. Why wouldn't you do it? If you can afford it and you're willing to take the risk, I guess, you can make great money. And a lot of people retire on, I don't know what the figure is, the average figure for how much they retire on in super, but it is not enough to live off. So investing in property can really set you up.
And I'll put the final cream on top, right? If you can be leveraging, like you said, that was the key word, leveraging your property or your wealth to get into more property, to get a greater return on capital rather than return of interest, right? Or return on interest. If you can do that, and then you can also have it pay itself off, or have the tenant pay itself off. And then if you're also earning a decent income, be able to what they call negative gear, meaning claim things like depreciation of the home, okay, that you're renting out, that can actually give you a bigger tax return. You're creating wealth much more substantially and compounding, like you mentioned earlier, your effect, because you're making more money on property, it's paying for itself, so it's more cash flow strong. You're leveraging the tax man as well, so you're getting out of tax simultaneously. If you do that in a compounded fashion over 1 year, 2 year, 10 years, 20 years, you're right. By leveraging that specialist education, you're in a 2, 3, 5 times better financial position leading into retirement. And I think that's what's missing big time. And that's what's definitely missing with a lot of the clientele that I speak with, a lot that I refer to both of you, is they're not getting that simple education. They're not understanding, if I did this, if I bought property, if I leveraged my current position, how much better would I be off? Like, how much better off would I be?
No, you're right. And Katie mentioned as well, it depends on your age in terms of what type of property and whatnot you should be buying. You're absolutely spot on. And I think it's really important that what would be a good investment for me right now would be totally different to what would be good for you, and then what would be different to you as well, Katie. So again, just chatting to a specialist, same with loan structuring, right? What loan's going to be good for me is going to be completely different to yourself, and et cetera, et cetera. So I think just to tie it back to getting professionals in your corner, it's not a one size fits all for everyone, right? And I hope that people out there are becoming more educated, especially with the property spruikers, selling these dream investments, which are most of the time off the plan or the house and land package, and they're positioning them as though they're an amazing investment property, and they suit everyone from an 18-year-old apprentice to a 58-year-old person approaching retirement, which is that's wrong, right? So yeah, I think you just raised a good point around everything needs to be tailored to your own circumstances, I suppose. Property, loan structure, accounting, financial advice, etc., etc.
But it does, because I'll just pick up what you said then. If you've got a pre-retiree, they're in my opinion, just my opinion, they're best to have their property or some of their property inside super, because that ends up being a very good retirement tax effective strategy for all the money that they're earning on the property. So things like self-managed super funds are really good for a pre-retiree, because they're trying to get around tax on the income that they're earning on that property. But for someone that's in their 20s that wants to get out of a lot of tax and isn't as diligent with saving for super, they want to get a bigger tax refund back at the end of the year. So structuring is definitely very important.
Yeah, and in terms of the asset, without going into too much detail, but I guess if we have someone that's close to retirement, we would typically be looking at something that would be slightly more high yielding, because they don't have time. You're not going to be holding that asset for as long as someone in their 20s would be. So, we'd be looking at something that'd be high yielding, still obviously in fundamentally a really strong location, but they're not going to be able to, I guess, pick the fruits for the next 20 years of large compound growth, as opposed to someone in their 20s. You can say, look, let's just take a little bit of a haircut now on the yield, but let's just have a high focus on capital growth, because that's going to pay dividends for you over the next 20 years. Whereas if someone, like you said, it's say 60, then they don't need a huge amount of money at sort of 80, for example.
They don't have the stomach for the long-term volatility of growth, but they do need the income. A pensioner needs the income. They need the rental yield, or they need the yield, the dividends, etc., that come from a share portfolio. They need the money now, because that's what feeds them, because they don't have employment. So that is very, very different than, and that's where I suppose a property that generates a greater rental yield is more important for a pre-retiree or a pensioner than would be a 20-year-old who's looking for capital growth, quite a growth prospect style property that, like you said, in 20 years is going to double, triple, quadruple and enable the opportunity to buy a lot of other property as well.
Of course. So where do you think most people get it wrong?
Overall?
Yeah, like do you just think they're just not engaging right people, or do you just think there's too much information out there, so it's like analysis paralysis? What are your observations?
My viewpoint, and I'm going to use he's probably going to be watching this podcast, God love him, is I won't use his name, but my best mate, right? So my best mate comes in 2 years ago, great guy. You obviously like him as well. You said some great things about him. You know who you are out there. He comes in and I've spent time with him and his wife, who I'm very good friends with as well, educating them, explaining concepts, showing them the opportunity cost, showing them the value, the growth, the returns, how to structure the affairs, how to do it tax effective. And then I trusted you, and so I moved my mate over across to you, and you continued that education process. This is why we want to go in these locations. This is the yield we're going to get. This is the future prospect. And really, you kept that education process going. And he and his wife needed that to build confidence and trust to be able to take action. And I know, hand on heart, that with the latest transaction that's occurred and for future transactions, he'll continue to become more and more wealthy. He'll keep doing things in a really good fashion. He's also happy to pay for the advice and the help along the way, okay? He will be in a substantially better position in 10 years than if he hadn't got our advice. Now, luckily, I'm in the position where I'm his best mate. He trusts me, so I could promote this. But I think where it's coming unstuck is a large chunk of people out there don't have access to that. They know they need a broker to buy a house, and then they go speak to the broker, but the broker only knows half the story or a third of the story in this case. And then they might even go, oh, we've really got a really good accountant as well. So they've got 2/3 of the puzzle. But if they don't get property advice and they go take the money that we've just positioned or created for them and they go buy the wrong property, the whole model's fallen over. So I think it really is a holistic education process where they can put the respective parts of this property buying puzzle together, that over time when they leverage, they end up with a lot of wealth. And it doesn't have to be made hard, because what you do with these clients isn't hard. What I do with these clients in terms of education and process isn't hard. What you do is not hard with how you convey the message. But in their minds, this is a really big maze of no idea what I'm doing. And I suppose that's the real purpose of this podcast, is that we do podcasts on a lot of different topics and a lot of different things. But I think, I feel the thing that's missing is, if you don't know this stuff, go speak to Matt, go speak to Katie, go speak to myself, and at least get an hour or a half hour of free education that you can then take the 3 hours of education and go and instill that in your children and completely change your future wealth dynamics. So I think it's just awareness, to be honest with you. I just think people aren't aware of what they can do.
And I think it's mate, it's just not everyday people. I'm even shocked at some financial planners that we chat to, some accountants that we chat to, some mortgage brokers, some sales agents that really don't understand how to identify, high-performing investment properties, right? The amount of times I get called from a sales agent because they have a 2-bedroom apartment off the plan in at Gosford because it's a good investment is ridiculous. Which I just think not only is it... So if someone's out there listening right now and you don't work in this space at all, don't feel bad if you're not educated, because look, there are a lot of professionals out there that aren't educated either. Maybe they have a short-term view and they just want to write a loan if they're a mortgage broker, clip the ticket and just move on. Maybe if they're a financial advisor or an accountant, maybe they get third-party payments from somewhere. They just want to click the ticket and move on, right? And I know even, there are obviously some I'll just say buyer's agents or property specialists out there that also just want to click the ticket and move on, and they don't have that, I guess, that care factor and are willing to do the education stuff along the way. So that's probably another concerning thing for me is people in a position of authority, they don't have the education either, and maybe it's ego, I'm not sure what it is, but maybe they're just not willing to put their hand up and say, or maybe I'm not the right fit for you, I think you should maybe seek some additional advice, or maybe I'm not the right mortgage broker, but here's a mortgage broker that specialises in investing properties, they know how to build out loan structures, etc., etc.
I think a big thing we see as well is a lot of people don't, I think it's the perception around obtaining that advice, so financial advice or a buyer's agent. A big thing that we hear all the time is people don't want to pay for it. They don't want to pay for the advice. They don't want to pay. They're like, oh yeah, but that costs me however much. But it's just the way that you're thinking about it, and I guess the way that we try and position it back to them is how much will that make you? Yeah. So it's an investment in yourself and your education, and that's knowledge that you can then take with you for your whole investment journey. And yeah, I mean, you deal with all sort of different sorts of people, especially on the coast. But yeah, it's just I guess a fear people don't want to give out that money.
And just to add to that, there's also some that are willing to pay for the money and they're willing to pay for the fees, but they don't want to learn. Like, they don't want to know what's going on and why it's going on, because I think that's fundamentally the flaw and that has the greatest impact on them is, like, I think it, like I said before, is don't go and pay for advice and let your cookie cutter advisor, for example, or banker or property specialist or whatever else, just do something for you, like just to create a transaction. You need to understand why they're doing it. Like, this is your financial future. So what you need to be doing before you're transacting on any property, before you're transacting on any loan, or while you're transacting on any tax structure or anything else, is go, cool, why do you think that? Why is that the strategy? Because you need to be informed, because if you have that learnt capability or understanding or conceptual understanding, you get to teach your kids that, which means they become super wealthy at a very young age. And I think that's what's getting missed, is they either, people don't want to pay for advice, or they're happy to pay for the advice but they expect everything done for them. I think that this is a greater responsibility to go, how do I make money with property? How does that work? How do I structure my affairs? How do I go to different locations throughout Australia and buy really good property? How do I ascertain the best locations to buy property, premised on the environmental factors right there and then? So I think that's the thing that needs to really be addressed, is this stuff isn't rocket science. It can be learnt quite quickly, but there needs to be, like, you need to go get that information. For sure. And you're right, like the services that we all provide, they're not for everyone, right? Because you need to pay. But at the end of the day, if you're not paying for a service, that person that's giving you the advice isn't working in your best interest. Sure. Right? It's literally that simple. And it's interesting, especially with property. Most clients that we work with, I would say to them, at a minimum time frame, I want you to hold this property for sort of 15 years, for example. And we feel like, obviously, our fee, and obviously, I know, Ryan, with you want clients they're going to be with you for life, right? So we feel as though, and I'm sure you'd be the exact same opinion, that fee it's minor compared to what you could potentially earn. It's just difficult for people to understand it, right? And the trajectory that you yourself can steer people on, just through one conversation could save them tens of thousands, and down the track could even be hundreds of thousands, right? And that's excluding property. That might just be maybe how you manage your finances on a daily basis, or a couple of tax tips or whatever. Yeah. I agree. It's I think people buy into things when you can quantify the impact, like you mentioned before. Well, what's the money that you'll make me as my advisor? How much potential money could I make? How much better off could I be? What's the cost of not working with you and trying to just do what I've always done? I think that's something that's not articulated very well to clients, is what is the return? Like, how much better off will I be? Show me the impact, because once you do that, usually they'll go, well, we need to work together because I want this for my future. But I wouldn't mind transitioning a little bit from what you just mentioned. What do you think are some key things that people need to be mindful of education-wise in terms of creating long-term wealth with property? Like you just said tips there, and I think there's usually between us, there's some key things. It might be 5 to 10, but they're key things that enable you to really compound your wealth. I'm keen to know some of your strategies, tactics, ideas.
All right. I think first and foremost, and Katie, you'll probably back me up here, you really need to have good money habits. Right, there's no point in saying that you want to build out this, this property portfolio, investment portfolio, if you can't save money each week, or if you're out there spontaneously buying things online. So I think first and foremost, you need to have good money habits. Next bet would be obviously you need to get some professionals around you, and we've sort of banged on about that a lot here today. But I think in terms of, do you mean like what types of assets and what to look for? So I'll say if you're out there looking around and searching for a property, I would be looking at some key indicators that we look at are infrastructure for a location, government spending, private spending into an area. So what is the economy like? Is it diverse? Is it being injected by money? If so, how much? And relative to the population there. Is it close to a CBD? Is it not? Is it isolated? And the list goes on, but ultimately just understanding that we're following areas where people want to live. That's where they want to live, and within that location, what type of dwelling do they want to live in? So there's no point in buying a 2-bedroom apartment when everyone in the region or everyone within that suburb want to live in a home that's a 4-bed, 2-bath, 2-car, right? Because they're all families, for example. So it's just understanding that human, emotion and that human element as to whether or not, the property, I believe, is going to be suitable to invest in, because I think too often people are fixated on price, and also too often they're not willing to open their horizons. So they want to buy, in the location that they live in, or the suburb that they live in, or the region that they live in, and then they go, okay, my mortgage broker Katie's told me I can borrow $500,000, for example. What's available within 10 kilometres of where I live right now for $500,000, and that's the one. Let's go and buy it.
And I think I want you to elaborate on that a little bit further, because I think for me, and I'm happy to be corrected if I'm wrong here, I usually promote the exact opposite. So I would usually say to a client, the Central Coast is a very small part of Australia, and the prospect and opportunities throughout Australia are probably far greater in terms of short-term and long-term returns. So I want to know your viewpoint on that. I'm keen to...
Yeah, so look, obviously we all know the Central Coast market really well. I'll say that fundamentally the Central Coast market is a great market to be investing in, and I think will be for some time. And the reasons is because, look, close proximity to Sydney, we have great lifestyle drivers up here. We have a limited supply of properties available. We have a great economy, low supply chain, list goes on. However, most of the suburbs that I would deem, and the properties within those suburbs that I would deem to be as a suitable investment, is something that we'd be happy to put forward to our client, probably starting with a 1 in front of them, and I'm talking 7 figures, so we're starting at $1 million at a minimum. There are markets across Australia that we buy in and that we research where fundamentally they have all of the same growth drivers that the Central Coast has and offers. However, they're at a far more affordable price point. So they might be starting in $400,000, for example, $500,000. So I guess it's important. One, to understand that if you're investing in property, it's a business decision, and you want to expose yourself to the best opportunities available to you. All right. So all of us as Australian residents and Australian citizens, we have the ability to buy in any state across Australia. We're not limited to buy just in New South Wales or just in Victoria where they reside. So if you look at it as though it's a business transaction, of course, you need to be looking at where the best opportunities are. And if you're going to be looking at the best opportunities, you need to be looking Australia-wide. okay? And again, just following those key fundamentals as to whether or not, the market's going to perform as well is based on those pillars that I spoke with: the economy, infrastructure, population growth, supply chain. So how many properties are, coming onto the market or being built. Hopefully that's lower than, obviously you want that a really low supply chain. And then as you get into the nitty gritty, what's the yield within that area? Is that going to be obviously complementing your strategy, vacancy rates, and obviously past performance in capital growth, and the list goes on. Sorry if I've confused anyone there.
No, I don't think you did. I think it was good, and it was good. It was very good. So I might move over to you now, Katie, to tell me, that was great in terms of property selection, and sort of considerations and how to think bigger about property, not just sort of be Central Coast is the land of opportunity, because it's a small piece of land in Australia, right? But let's move over with financing. What financing is something that I've been through the financing process with so many people, including brokers like yourself, as well as banks. And I find that it does chop and change between brokers, especially considering care factors and the like. There's a lot of clients of mine, and there's a lot of people that are listening right now that they don't even really know what a broker is, or they don't even really know whether to go to a bank or use a broker. If I was one of these people and I was wanting to make this a seamless process, and I was wanting to do the main things right, similar to how we select a property, what would you be recommending? What would be your tactics and strategies to be able to do that?
So I think, like you said, a lot of people don't know what a broker does, and they don't know why they would go to a broker over a bank. Essentially, I guess the easiest way to put it is that the broker is working for you. In saying that, the barrier to entry is very low. So as Matt mentioned earlier, there are a lot of people in the industry who don't know what they're doing. You can make good money from it, and it's a relatively easy job to put a vanilla deal together. So if you've got a PAYG teacher and they've got a good deposit, good income, that's straightforward. It's easy. But the more complicated and I guess complex deals that we work with a lot of your clients as well, Brian, are self-employed and need a little bit more strategy behind it, which is what a broker or a good broker can provide. So we've got, as I said earlier, 30 to 40 lenders on the panel. So we're looking at all of those different policies. We're looking at policies to see the best fit, to save you the most money, the best structure in terms of working with your accountant and tax planning and things like that to put you in the best sort of position. I guess the three main things that a lender will look at, so they call it the 3 C's of credit. So you've got your character, the lender will look at your credit history, so essentially your capacity to, that's it, character, capacity, and equity position.
Yep.
So your credit history, have you been able to make repayments on time for your other debts and things like that? Are you making payments for your utility bills and all of that kind of stuff? What does your credit report look like? That's score and defaults and things like that. So you want to have that in a pretty good sort of position. Make sure you're always on time with things. Capacity to repay. So there are a lot of sort of things that come into this, and this is where we start to talk about interest rates and just that whole sort of thing is not that fun to talk about. But your income versus your expenses, essentially. And then your equity position, so that could be in terms of deposit or equity in other property. So basically, whilst all of those things are sort of separate in a way, they all do need to work together to make sure that you're in the best sort of position to put forward to a lender. You want to have as many lender options available as you can. So by making sure all of those things are as strong as possible, you're opening up sort of all of the lender options that you can to save you the most money in terms of interest and stuff like that. So being in a good position to borrow money, I think from our perspective, having a pre-approval in place before you go and find property, before maybe you have had a chat to your buyer's agent, and had a look at sort of areas that you want to be investing in. But as Matt can sort of I guess, say also, when you find a property, you do sort of need to move relatively quickly in a lot of sort of senses so that you don't miss out. So it can take time to get a pre-approval, and it can take time for banks to lend you the money essentially. So you just want to make sure that you've got everything in order so that you're not sort of missing out on anything. So, yeah.
I think it's really important as well. There's probably a couple of things that we encourage our clients to do as well is chat to maybe one or two different brokers just to see whether you're aligned. Chat to one or two different accountants or financial advisors to see if you're aligned. Same with buyer's agents. But get curious around the professional that you're helping in terms of, like you mentioned about mortgage brokers, relatively low entry point. Same with getting a real estate license, pretty easy to get. So a couple of questions that you could ask your mortgage broker is, do you own investment properties as well? Like yes or no? Do you own property? Yes or no? Have you helped people buy investment properties in the past? Yes or no? If so, how many? Because we've seen, and this has happened to me personally, people have been, they've been in a position to be able to buy because they've gained some equity in their property, or maybe they've paid down some debt. However, because of their loan structuring, they're not able to do anything. Okay, so that has I guess come to fruition because the mortgage broker wasn't completely aware of the individual circumstances, or maybe they just they weren't aware of I guess the long-term impacts if you are to lock in for a loan, for example. So I think if you're out there and you're considering chatting to a couple of different professionals, just get curious around what their strengths are. Like some people might not have any interest in helping people buy investment properties, in the mortgage broking space. Maybe they just focus on self-employed people buying owner-occupiers. So, I think that can really help as well.
Yeah, and I think the other thing too is that's why it's so important for your broker and your buyer's agent and your financial planner and accountant to communicate so that everybody is aware of your long-term goals, so that we can structure it in a way that will help you achieve those.
Could not agree more. I would say we've been operating for about 3 years now. I think last year, it was around 70% of our investor clients were buying their second or third property with us, and we're continuing to do that literally right now with other clients. And this is planned out 18 months, 24 months ago. We're like, okay, we're going to buy one now. This is where we hope that the price point will get to, and once it does, or we'll then look to buy again, or in this time frame we're going to look to buy again. So exactly like what you just mentioned, we're all on board and we're all just checking back in to say, hey, remember how we wanted to look to buy again? Do you want to? Yes or no? Because you have the ability to do so, because we've plan that with our loan structuring, and because we've sat down with the financial planner or the accountant and they've given us obviously the forecasting and whatnot. So I think that's also really, really critical. You want to sit down with the broker and explain what your long-term goals are, so to speak.
Yeah,
I do agree on that big time, because I think two things you said that are really stuck with me is you've got to have a team sitting around with the same beliefs and the same values, and you'll find that if they aren't aligned, that'll show itself, okay? Because you'll be able to tell with your little team that they're not talking the same language, and there's a bit of conflict, which is the first alarm bell. I also agreed that you definitely need to get advice off people that actually are doing what they're suggesting. There needs to be that level of embodiment. I think that's why you and I get along, Matt, in particular, is we've both bought, sold, held property, so we appreciate it. We don't just know the concepts and the terms and the strategies, we live by them. Okay, so I think that's really important. The same with you, Katie, that's why we've aligned. So I definitely think get advice from people that really are already doing it, okay? Because you're gonna need some confidence, and you're gonna get your confidence the best from people that have done it, that have gone through it. I might wrap that up there, guys, if that's cool. We could sit here all day and talk, but unfortunately, there'd be properties that would get missed, right? And you wouldn't be able to broker the deal. So we'll wrap it up then. Really appreciate it, Matt. Anyone that needs a buyer's agent, actually, I'll reframe that. Anyone that needs to create wealth leveraging property, make sure you reach out to Matt from Sharpe Property Buyers, because if you don't, you'll be doing it yourself. And if you're doing it yourself, you're not going to create the wealth you want. Definitely reach out to Katie. I know I use Katie. Katie's great. I wouldn't want to be trying to broker a deal myself and trying to navigate interest rates and loan structures and all of the rest of it. reach out to Katie from Mortgage Choice at Erina. And if you need help, financial planning, tax structuring, business coaching, you know where to find me. Ryan from Strategic Advisory. Thanks, guys, for your time.
Thank you.
Appreciate it.
Thank you.